Good morning, traders. It's Tuesday, the 6th of October, 2015. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not much news to talk about overnight. Europe is pretty much flat to higher with the ES lower slightly. Um, Seeing a lot of strength in the DAX and Euro stocks this morning at almost up 1% from yesterday. Crude oil almost up 1% from yesterday, with the Eurobond hitting a low of off 35 basis points. So overall, a mixed bag today. Looks like risk is still on. It's a risk on type of situation. The Reserve Bank of Australia leaves cash rate target. Let me turn on my news feed. Cash rate target unchanged at 2% as expected. German August factory orders came in at much worse, negative 1.8% versus positive 0.5 expected. Year on year, the performance has been 1.9% versus 5.6% expected, so way off. That caused a small drop when the number came out, but the market quickly took that back. U.S. August trade balance came in at negative 48.33 billion versus negative 47.1 billion. Looking at what's ahead for today, at 9 o'clock Central, we have IBD tip optimism looking for 44.5, and then other than that, the deck is clear except for speakers. We have Fed Speaker George at 8:15 in about 10 minutes. We have the IMF release on the World Economic Outlook at 9 o'clock Central. We also have ECB's Draghi speaking in Frankfurt at noon. And then we have Fed Speaker Williams speaking at 4:30 Central. Again, all time Central. Um, let's switch gears now and take a look at what happened yesterday. So let me start off by saying that yesterday is a type of day that I seek to identify in many ways and stay out of. Yesterday is not my type of day. It's not. I'm not a momentum trader, and so yesterday is the type of day that comes along once every few weeks, and it has around a 21% occurrence in the data set I last tested, which is getting a little old, of 1,400 days. And the study is from the beginning of this year, so it may be a little bit dated, but it occurs around 18 to 21% of the time where we have a consistent trend that finishes near highs. We've seen a lot of that recently. We had that the day before. Let's not go with, let's go with yellow. We had that the day before, and we continued it yesterday. This is a higher time frame operating in the market, and when a higher time frame is persistent in the market, generally it's the locals, which includes traders, day traders like us, who pay up, um, who pay the price for that. It's just part of the risk. It's like being a grocer. You make money by turning over vegetables and perishable items, but every once in a while something happens that causes you to lose an entire purchase or lose your entire inventory and put it in the dumpster. So this is very similar. Does not characterize the pursuit of trading. It's just part of it. So yesterday, the key expectation was for us to open um, out of range, right? And we did. But the expectation was for it to break the overnight high, which was around 60. And then we were looking for it to fall towards the 43 being the prior day's high. Not necessarily get there, but the expectation was for it to fall. And then we were looking for a rally back up. I was really hunting for that test down yesterday to set up a good, decent base in the gap zone before it moves up. But yesterday, it fluttered around on the open a little bit. It did look like an OAOR, an open auction out of range, or an open rejection reverse. It opened, rejected the lows, and then reversed and then continued to move. An open rejection reverse simply describes a market that has a driver in it who is not extremely aggressive. An extremely aggressive driver is an open shows up as an open drive. This is a much higher time frame player who comes into the market to do business on a wide scale and high volume, and those are the kinds of days we saw um, on Friday, where the day type the day type levels and stuff don't matter to that participant. They don't really care where yesterday's high or low or point of control or whatever is. Um, they're operating in a much higher time frame, and generally they create a very sustainable move. And we our goal early on is to identify. This is why I post the opening type and the opening swing on Twitter as much as I can every day. It's an attempt to the goal there is to identify who the participant is. Once we know who the participant is, it's easier for us to assess what kind of risk we're going to take on the day, if we should be fading breakouts or if we should be going with breakouts or buying pullbacks towards, buying pullbacks towards the range for a break, or should we wait for the break and then sell it back towards the mid. All of that depends on, it's not the same every day. I know a lot of you want to come in and just do the same thing every day, and that may work. There are computer systems that do that. You just have to make sure you take every single trade so you're not experiencing the max drawdown and missing on opportunities to get your to get higher peaks. But my approach is to identify as much as possible who is likely to be in control, what are they doing, how good of a job they're doing, and what areas. And then what I'm looking for in the past, by looking at prior profiles, by looking at the context that I'm discussing with you here every day for the last, two and a half years, is to see how it reacts in certain areas that tie into the short time frame player, which means they're looking at day type levels, which means highs, lows, gap closes, the opening price, mids, yesterday's point of control, yesterday's value high, yesterday's value low, on and on and on. Those are day type levels. If they are respected, then I anticipate that the short time frame player, meaning the day trader, to the short intermediate player, is in control. And when that happens, I that's those are my days. I'm looking for I'd like to trade with the intermediate time frame trader because they're much more obvious on what they're doing. But if I see that the market opens and it's just ripping up, then it's a higher time frame, and it's a tougher trade for me. It's hard for me to find, you know, okay, buy the pullbacks, but how far is a pullback? How much should I risk? What if I buy this pullback here and it comes down here? And um, am I in trouble yet, or should I give it more room? That sort of thing. And so I don't overthink it. That's someone else's plan. I don't overthink it. I just step aside on these days when I don't see what it's trying to do, because my priority is um, preservation of capital. The goal in what we're doing here, and I want to be very clear about this, the goal in what we're doing as we come in every day is to uh, create as many samples using our trade plan as possible, because you cannot assess what you're doing as a trader in 5, 10, 15 trades. That's not going to provide enough information about your trading plan to tell you if your plan has an edge. So in order for us to have as many trade samples as possible, trade samples that are in the plan, from the plan, as part of your plan, as possible, preservation of capital is a key element. So you have to sit there and wait for the market to do what you expected. You have several approaches to what the day could do, and then only stake your funds, your account when you see that it's complying with one of your plans. And even then, even if it's complying with one of your plans, the outcome of every trade is 50-50, and it is unchangeable, unmovable, immovable. It's always going to be 50-50. We don't know if what it did last time is the same thing it's going to do this time. We have no idea. The best we can do is stack the probabilities in our favor. That's why I talk about statistics a lot. And then take the trade and let it play out the way it's intended to, and then do that as much as possible. But if I sit here and sell this and sell it and sell it and add some more and add some more and add some more, all I've done is I've taken one trade, and I've staked 50% or 60% of my account on that trade, as opposed to taking 300-400 trades that that may have the same loss, but I have gained so much from having, those 200-300 trades. Each trade gives us each trade, when done according to plan, is deliberate practice. It is as good as it gets. The 10,000 hours that Malcolm Gladwell talks about, it's not about the hours. It really isn't. It's misunderstood. It's about how much time or how many times you deliberately execute your plan or deliberately practice. And that involves planning, executing, documenting, planning, executing, documenting. I'll stop with the tirade and go over what happened yesterday. But overall, we did not get the drop. I then looked for Hypo 2, which was a pop, chop, and then drop back into the range. That did not come through either. And then Hypo 3 is what we got yesterday. And it's not often that you see Hypo 3 work out, but essentially we had a bid under the market all day long, and we ended up with a multi-distribution profile with the point of control remaining at 65.50. The overall market, especially this product here, looks extended. The NQ, for example, behaved a little bit differently. It had a very clear open auction out of range that it broke out of, and it tested and retested. So there was plenty of opportunity here to see the bid side before it started to take off. It has the same. It's following the same pattern overall. They're both relatively strong, but overall, the structure we've left behind over the last 2 days from an auction perspective is incomplete. The auction is incomplete. We have no idea what's going on in here, and overall, the structure that was left behind on Friday is also weak on the buy side. So the expectation, as usual, is at some point we are likely to come back and test this gap through, and then come down and test these high volume nodes, then base, then move up, and that's the stronger base for a rally. Right now, this is overall, when you look at the big picture, overall, this is just a pullback in a large balance zone. That's what it is. So it was interesting. I saw a lot on TV yesterday. We have the TV running here, and I saw people talking about, oh yeah, this is the foundation we've been waiting for and stuff. But overall, I don't know that it is the foundation for another rally. It's essentially balancing in range. Once it takes out the 2011, pulls back in, bases, and then starts to move up, then I could argue that the impulsive move down has been canceled and that the bears are really in trouble. But at the moment, we're trading in a very noisy zone, and so we're looking at composites, micro composites for details. So this morning, I'm going to go ahead and cancel a lot of these composites here and just use one that describes the entire area so we can see what is going on. So as we pull this across here, we'll see that overall we're in the very, very fat part of the profile. And what this is saying is it's likely to peter out and come back through to 127.75, 122.75, 1922.75, 1923. This, I expect a retest of this area, and we're likely to get it on some sort of a news release or something out of China or whatever. Not sure what's going to cause it, but the bottom line is we are in a big bounce zone. If you're if you had a great time yesterday and you're still looking bullish and so on, I would caution you to take something off the table and just relax. We do have a big target above us that's still untouched. It's 1985. The 1985 comes from the Fed day. So yesterday we started to breach into the Fed day range, and let's look at that real quick. I'm running out of time. So if we look at the Fed day range right here, we've pushed right into this 1975 into the 1980 before the market failed over and is trading lower right now. So the S&P is trading 1974. Currently, it's trading right in here. And what we did is we pushed out of this, out of the immediate balance and into the Fed day. And in 1985 was the Fed day point of control. This is the Fed day range right now. So that's where we are. I expect resistance in this area. I expect today to be choppy. And if we look at the overnight session, you can see that we are completely balanced overnight all of a sudden. Whereas the prior overnight session, you could see that the prior overnight session had a very strong trend to it, and that trend continued on through yesterday's session. The overnight session last night was very balanced. It's moving back up towards yesterday's close. It has come down to the point of control from yesterday to test that. It has not done so in the day session, so that point of control is still valid. This morning, I would expect some pretty big chop, and that's my primary hypothesis. This morning is probably a mean reversion type trade. Lots of chop back and forth, and that's what I'm looking for. I don't have much more to enlighten you with here. Other than that, this is a good time until the market finds its sellers, and it's going to continue to go higher. The markets continue to go higher until they find a motivated seller, and once they do, they drop very quickly, and the market moves lower until it finds a motivated buyer, and then it pushes up very quickly. And yesterday, it just could not find its sellers. Near the close, it did, but that's more of the closing effect than I believe it to be the market finding a seller. The overall high yesterday was weak with a high point with a very heavy high volume node up top. So I was looking for a higher high. We're going to be looking for a higher high at some point. But overall, even if the market pushes up today, I expect it to fail back in and be stuck in yesterday's range. And that's basically what I'm looking for the market to prove to me before I go in and start banging away on the short side or whatever. The market has to show me what its intention is. It does not have to respect what I think. It just needs to show me what its intention is. And my goal is to find a good risk reward play once that intention has been shown. And if you listen to the market carefully, if you look at the price action carefully, it does show us its intention all the time. Good luck today, and I'll catch you tomorrow. Take care.